Good evening, all the joinees. Hi, this is Prajakta. I would like to warmly welcome you all on behalf of NGEN Research. So, meanwhile, others join. Let us introduce our topic for today's webinar. Today, we will be specifically discussing on individual fund analytics. We will typically see how we can actually load in a category of mutual funds, and then we will just choose one fund randomly, and we will do an entire fund analytics of that particular fund. Now, when we are doing fund analytics, firstly, what we will do is we will compare the performance of that particular fund with a benchmark. Once the performance with benchmark is compared, then we will move ahead and we can check how we can actually do a peers comparison. We will be considering a particular index and then compare the performance of all of its peers in that particular category. We will also have a look as to how the fund scores, which is a recently launched release from NGEN Markets, will be helpful in doing a peer comparison as well. Next, we will move over to asset allocation and holding analysis of that individual mutual fund that we are really analyzing. Here, we will see how we can check which sector is that fund actually very, very overweight on. This is with respect to sectors. We can also check this on stock level as well, and the month-on-month trend as to how did these holdings change month on month for the last 12 months. This will be our discussion revolving around asset allocation analysis. Next, we will move ahead and understand rolling returns analysis and a scenario analysis. This is like a what if analysis that we are running, basis the scenarios that we can generate on the platform, put in a start and end date, and actually run the analysis of that particular fund's performance versus to that of the benchmark's performance. Finally, we will throw the forum open for a Q&A session, wherein if you have any questions, you can directly type in the chat box or directly unmute yourself to speak. So let us now begin. For the webinar specific discussion, let me go on the NGEN Markets tab. And today, because we'll be doing individual fund analytics, first, let me show you ways of actually onboarding multiple funds from one particular category onto the compare section, which will be typically used for doing a peers analysis. Okay, so today we'll be focusing on the funds section specifically, and of course, individual fund analytics. So the moment you open the funds section, you will see the second tab, which is the category averages. You simply go here and choose a asset class of which funds we are really trying to analyze today. So let's consider today all the value category funds from the equity as an asset class. So I've chosen in equity only. The check box is right there. So what I've done is I've just unticked everything else and I've just ticked on equity. So only one asset class is now ticked. Now I'm going to locate value category, value funds category. So that is right there. The basic statistics that I can see here, that there are 20 funds. The count of that is 20. That means there are 20 funds around in the markets from value as a subcategory. Their inception returns of all of these funds, average returns of all of these funds since their respective inception dates is a 16.60%. Volatility, the average volatility of this entire list of 20 funds is about 17%. So by volatility, we mean the standard deviation of the returns of each of these funds. And if we take an average of that, that comes to a 17.22% average volatility. Next, we can see some basic details like Sharpe ratio, value at risk numbers, the total expense ratio of this entire category that is visible right here. Now, the moment you click on this, row, the white row, the moment you click on that, a drill down will open, which will list out all these 20 funds in this manner, just below the entire category average. So this is the category average, and these are the respective statistics of these respective funds. For an example, if we have a look at, let's say, Sharpe ratio numbers. So Sharpe ratio of the entire category is a 0.69. On the other hand, I have a HSBC value fund, which has a Sharpe ratio of less than the category average. On the other hand, I have a DSP value fund, which has a Sharpe ratio of 1.07. That's slightly above the category average. Of course, a point to note here is all of these statistics that you can see here, the Sharpe ratio, the volatility, all of these are since the respective fund's inception date. Okay. Now, if you want to actually set in a start date to run this analysis from a fair from a fair perspective, meaning comparing apples to apples. For that, you will have to set in a common start date. Only then the performance can be compared across different funds. So for that, I simply click on this tab, which will transfer all of these funds in the compare section in one single go. I simply click on this, and entire list of 20 funds is going to get added in the compare section. Look at that. So we have 20 funds and the data is popping up. Once this is here, the number one thing that you will do, the moment you come in the compare section, is change in the start date. Why we are doing this? This is for ensuring that we are doing a fair comparison across, let's say, a time period of our choice. Let's say we want to do this comparison for the last 4 years. So I choose in January 2020. I put in a date, let's say 10th of January, and I click on go. The moment I do that, you will see a prompt which says in a red exclamation mark, look, you have chosen a custom start date. Now, the entire analytics that you're seeing, the CAGR numbers, the standard deviation, the Sharpe ratio, all the statistics are for the last 4 years. And this becomes very, very crucial in actually ensuring that we are comparing funds across a common start date and we are comparing funds correctly, right? So this is how you ensure a correct peers analysis. So let's simply consider a list of funds and then sort this on the basis of Sharpe ratio. So if you were to simply do that, I simply click on the column heading, and all of these are going to get sorted on the basis of their respective Sharpe ratios. So I can see that the best performing fund basis the Sharpe ratio is a Baroda BNP Paribas fund. But it is important to note that this has been around for only less than a year, right? Only 0.60. Right now, why have I highlighted this? This is because I am just coming to the fund score, which is a algorithmic rating that we have developed at NGEN Markets to rank funds on the basis of certain set parameters. Now, what all parameters are considered to rank these funds? Let me just simply come to that. So for that, let me simply load in a fund in a new tab. And you can see once a fund is loaded in a new tab, you can see a black brick beside that fund, which says, okay, the rating or the ranking of this particular fund out of 10 is a 6.90. Right? The moment I click on this, you will get to see a small window, which again opens up, which talks about the methodology that we have really adopted to give these rankings. In this case, it is very important to note that these fund scores can be compared within the same category. That means you can compare a fund score of a Nippon India Value Fund with maybe a Tata Equity PE Fund, which is again a fund from the same category, right? So when we say that, okay, Tata Equity PE Fund, the fund score of that is a 4.67, and a Nippon India Value Fund, the score is 6.90. We can definitely say that Nippon is a better performing value fund when compared to a Tata. But these fund scores are not comparable intra-category, right? So you cannot compare a FlexiCap fund score with a Nippon India Value Fund score, right? That's simply does not how this valuation or evaluation really works. Now, let us come to the parameters that we have considered. We have given in a weightage of 10% to the AUM of these funds. Next, we have given a consideration to the age for which these funds have been around, right? So if a fund is very, very young, that means it does not have enough data to actually generate these fund scores, then it will definitely have a disadvantage over a fund that has actually proven its mettle over the last 3 years, 4 years, 5 years. Right. Therefore, the balance weightage is to short, medium, and long term risk and returns and volatility, which is risk adjusted returns. So for short, medium, and long term, we've considered 1 year, 3 year, and 5 year Sharpe ratios. So if a fund does not have data for these Sharpe ratios for these many durations, it will definitely be given a lesser score. Even though since the time it has been launched, if it has generated stupendous return, doesn't matter. It will definitely have the disadvantage over its peers who have actually proven their mettle for the last 5 years period. Okay, so this is how you can check these fund scores. Now let us come to the specific tiles that you can see. So one is the NGEN consolidated fund score, which is predominantly the major fund score that is visible everywhere on the platform, right? So for Nippon, you will everywhere on the platform see this 6.90 score, right? Even in the compare section, if we go, let us sort this. Yeah, so look at that. Nippon India Value Fund 6.90 is what is going to be visible at all the places. The underlying components of that, which is risk score and return score, these typically are independent scores given only on the basis of that one particular parameter that it is catering to. Meaning, when we say risk score, it only considers the volatility or the standard deviation of this particular fund. Okay. On the other hand, when we consider return score, we say that okay, this particular parameter considers only the returns, plain simple returns of this particular fund. Now we see that this particular fund scores really low on the risk score. Why is that? Because it typically would have a very less volatility protection, meaning it would definitely have very high volatility. And how do you corroborate that? How do you cross verify that? You simply click on close, and we have anyway opened single fund analytics. And let's simply put in a common start date. So let's consider 10-year analysis. So I'm just considering 10th of January onwards. And the moment we run this analysis, look at the volatility numbers of this particular fund. It has a volatility which is even higher than the benchmark volatility itself. The benchmark in this case is a Nifty 500, which is the benchmark that is used to compare the performance of the fund against the against it itself. So, for an example, the benchmark volatility is a 16.05%. On the other hand, the fund's volatility is a 16.80. So, it has very less volatility protection. It is an extremely highly volatile fund, even if we compare that with a benchmark. That is exactly what is visible even in the historical value at risk number. Now, what this value at risk number tells you is what is the value that is invested in this fund that is at risk. At risk of what? At risk of losing. So you see, when we compare that with the benchmark number, and if I consider if 100 rupees is invested simultaneously in the fund as well as the benchmark gives me a capital erosion of 23 rupees. On the other hand, the fund gives me a capital erosion, meaning the loss of negative 25 rupees. Right. So that's definitely higher volatile than the benchmark itself. And therefore, that's precisely the reason you see risk score is very, very low. Contrary to this, the return score is very, very high, right? Very, very high, meaning closer to 10, right? That is what I mean by when I say that it's a high score, right? So now if you simply consider returns in isolation, let's consider cumulative return, meaning the absolute return of this fund for the last 10-year period that we have considered as compared to that of the benchmark. So the benchmark's cumulative or absolute return for the last 10-year period is a 300%, 306% to be precise. On the other hand, the fund's absolute return over the last 10-year period is a 463%. So definitely clear cut, there's an alpha over the benchmark return. Okay, and that's clearly visible here as well. Cumulative excess on the benchmark. That's 156% alpha over the last 10-year period. And therefore, you see the return score is pretty high for this particular fund. On the other hand, if you have a look at this NGEN fund score, which is ultimately a combination of not just return scores plus risk score, so that considers the risk adjusted returns, meaning the Sharpe ratios, and of course certain percentage to the AUM. And therefore, you see that this is the third ranked fund in this entire category. So we have two funds that are better than Nippon India Value Fund if we consider the ratings as on this month end date. So that's 31st December fund scores. Again, an important thing to note here is that these fund scores will stay static for a period of 1 month. So basically, these fund scores update every month. So as we approach 31st of January, you will see this fund score update. Okay, so this was about peers comparison that you can do with this NGEN fund scores, which is a recent release. We came up with this release only in the month of November last year. Now let us have a look at individual funds performance against that of the benchmark. Now, when we're comparing its performance against the benchmark, plain simple parameters like a cumulative return, a CAGR, a volatility is definitely there. But when you actually compare its performance with the benchmark in a bull run and a bear run, what becomes very, very important to note is the up capture ratio and the down capture ratio. Because this is what is going to tell you what is the catch up that the fund is doing when the benchmark is actually in a bull run, right? So for that, let us refer to the up capture ratio that is appearing right here. So up capture ratio, you see that this is 116.27. Now, if you want to really drill down here and to actually make sense of these numbers, you simply click on this I button. The moment you do that, you will see a small window opening up. It will list out month on month benchmark returns, and it will capture only those months when the benchmark gave in positive returns. What do I mean by that? So you will see only those months. So from after February 2014, it's March, April, May, and typically this is a bull run that the benchmark was in. And this is typically elections 2014 scenario, right? So benchmark was consistently giving positive returns. After that, look at that. After May 2015, direct month that is being captured is at July 2015, right? Why is June not captured? That's because benchmark gave a negative return in that particular month. Therefore, that is not included in the up capture ratio. Now, this is the explanation why we have considered only the positive generating returning return months in the up capture ratio in the benchmark column. Now, what happened to the portfolio when the benchmark went up? So in the month of February 2014, the benchmark went up by 2.98%, close to 3%. On the other hand, the portfolio went up only by a 2.89%. Right? So this is how you can compare the catching up that the portfolio is doing, portfolio of the fund, rather the fund is doing when the benchmark is in a bull run. Now, if you cumulate all of this up month on month, that comes to a 68% up move by the portfolio of this particular fund. That means the fund goes up 68% over the last 10 years, month on month. On the other hand, the benchmark goes up only by a 58%. If you take a simple ratio of that, so 68 divided by 58, that comes to a value which is above 100. And therefore, you will see the up capture ratio is above 100. So if the up capture ratio is above 100, that's definitely a good thing that the fund is actually catching up better than the benchmark itself when the benchmark is rising. So it's definitely a good thing about the fund. Exact converse is the logic when you see the down capture ratio. Down capture ratio talks about the resilience of a fund when the benchmark is in a bearish trend, right? So when there's a lot of volatility in the benchmark or the markets around, generally speaking, how much does the fund fall corresponding to that down move? So for that, you simply again repeat the process, click on this I button, and let's simply have a look at the COVID drawdown, right? So onset of COVID. For an example, in the month of February 2020, right, the benchmark fell by a 6.39%, right? On the other hand, the fund fell by only a 4.79%. So this was pretty resilient at that time. But in the immediately next month, look what happened. So the benchmark went down by -25. The fund went down even further, -28. So it was not very resilient in that particular month, right? So this is how, if you accumulate all of this up month on month, that comes to a down movement by the fund close to 35%, when the benchmark fell only by a -33%. And therefore, the down capture ratio in this case is also above 100. Typically, if you are really screening these funds for a conservative investor, you would rather like that fund to be resilient to down movements, right? So therefore, ideally, the down capture ratio you should be targeting is below 100. If the ratio would be below 100, that would typically mean when the benchmark goes down by 1, the fund goes down by less than 1. Right. So this is what is the interpretation and relevance of down capture ratio and the up capture ratio in single fund analytics. Let us now move ahead to the second part of the webinar, wherein we discuss on the asset allocation and the holding analysis of these funds. So now that we are analyzing this fund, let's go to simply the asset allocation tab. And the moment you go on the asset allocation, the first sub tab you will see is the overview tab, wherein you can see all the latest holdings of this particular fund as on 31st of December 2023. So the date is updated right here. So these are the holdings of this particular fund as of the latest update. That's 31st of December 2023. Now these AMCs release these monthly updates every month, and therefore you will see this data updating on the platform NGEN Markets monthly basis. Our cycle typically runs from 8th to 13th of every month, right? So we are already into the Jan cycle, and therefore you will see the data updated for 31st of December. So as a gist, you can see that, okay, there are total 82 stocks that this particular fund holds, and these are the details. Next, let's come to the insights that you can actually draw from this individual fund analytics with respect to the holdings analytics, basically the asset allocation. For that, you simply come to positions over time and you look at the month-on-month trend that this fund has for investing into various stocks. For an example, let's first understand what the screen really means. So the moment you come here, you will see a list of all the securities, meaning the stocks that the fund has, the sectors to which these stocks belong to. And then after that, you will see columnar way last 12 months, month on month, percentage held into each of these stocks. Right. So last month on, so this will run for the last 12 months. So December 2022 will be the oldest, and the latest data would be the 31st of December 2023. Now you will see some color coding here, right? So now what does that mean? So if it's a green color coding, that means that as compared to the previous month, in the month of December, there was an increase in allocation to this particular stock by this particular fund. Meaning Nippon India Value Fund increased its allocation to L&T as a stock in the month of December 2023. And it increased from a 3.41% to a 3.53%. Therefore, this is color coded as green. Conversely, if it's a reduction, month-on-month reduction, then you will see this the same thing color coded into red. So that is how you interpret these color codings. Now, there's one more beautiful insight that you can make out from this, positions over time, which is to say that whether this increase or decrease that you are just seeing is actually because of, a mark to market of gains or losses, or is it actually because there's an additional position with respect to additional number of shares taken of these stocks. So how do you see that? For that, we have a brilliant feature in this drop down, which is shares in lakhs, right? So let's first understand HDFC Bank. So HDFC Bank, you see a month on month, apparently this seems like there is an increase in the holding by this particular fund in this particular stock. But whether is this attributable to mark to market or actually increase in number of shares? How do you figure out that? You simply use this drop down, click on shares in lakhs, and these, of course, the data will change, and you simply locate HDFC Bank. One second. Yeah, so HDFC Bank is right there. So look at that. The number of shares have not increased. So this fund, Nippon India Value Fund, has not increased number of shares into HDFC Bank. But because there was an up move, the price of this stock actually increased in the month of December. Therefore, you will see an increase in the percentage holding into this particular stock. Let's go back. Let's change it to percentage and look at that. 5.51 has become a 5.52. This is because the price of this stock has actually increased. So this is attributable to the mark to market of gains actually of this particular stock. You can similarly check this, for a converse situation. So for an example, Power Finance Corporation, right? So simply look at that, and then you can actually have a look what were the number of shares that were held in that particular stock and how did they change. So for an example, look at that. Power Finance Corporation, there's an actual reduction in the number of shares. Of course, in lakhs. So 54.72 lakh shares is what Nippon India held on to into this particular stock. This actually reduced. I mean, it liquidated its shares, and ultimately, as on 31st of December, those were at 46.72 lakhs, right? And therefore, you will see this reduction in that. So this is actually selling off of shares. Okay, so this is one analysis that you can do. So now this was on a stock level. You can replicate this on a largest increase or decrease with respect to stocks by simply clicking on position changes by month. Here you will not just see the largest increases or largest decreases, but you'll also see the completely new positions that were added by this particular fund as compared to the previous month. So that means if we have this LTI Mindtree as a stock in this particular tab, which is position completely added, that means this particular fund, Nippon India Value Fund, did not have LTI Mindtree as a stock in the previous month. This is a fresh position that it has taken in the month of December. So this is for stock level. Now, this same analytics can even be seen on a sector level. For checking sector level analysis, you simply go here in the equity sectors tab, and you can check which is the extremely highest allocated sector by this particular fund. In this case, we see that banks as a sector is extremely highly allocated sector. It has 15% of its AUM into banks as a sector. So it's 15.14% to be precise. You simply click on this bar graph, you will have the details, which all stocks are there in that particular sector. Now, again, if you want to have a look at the trend analysis, how has the bullishness or the bearishness of this particular fund changed over the months, over the last 12 months, month on month, you simply come to positions over time. And now using this toggle, go on by sector, right? Previously, we were having a look at by stock or by security. Let us now go and check this by sector. And that is how you can actually make out the trend of any particular mutual fund in investing in various sectors. So look at that. Typically in banks as a sector, it was as high as a 22% in the month of July 2023. After that, there has been a consistent reduction in the exposure that this fund has taken towards banking sector. And that is clearly visible in this red trend that you can see here. Right. So this is asset allocation and holding analysis overview of an individual fund. Let us now move ahead to the next discussion, wherein we will be discussing the rolling returns analysis of this particular fund. There is a separate dedicated tab for rolling analysis. You simply go here. The moment you go here, you will see, first of all, you will see rolling windows that are available right here. Right. So in this case, we are doing this analysis for the last 10 years. So from 2014 to 2024, this is a 10-year period. And let's say I want to run this analysis, rolling returns analysis, which checks the consistency of this fund in generating returns over different time periods. So let's consider 1 year. That's equivalent to 260 days everywhere on this platform. So 1 year in terms of working days, everywhere it's 260 days. Now let's say I want to do this for a 3-year period. I simply multiply 260 by 3. That's 780. I input 780 in the second window. And the third window, I want to run a 5-year analysis. So 5-year analysis, 260 multiplied by 5, that's 1,300. The moment I input this, I click on run. And this is the methodology. So if you want to check this in annualized terms or absolute terms, let's first consider absolute terms. So in this case, you will see this 3 color codings, the 260 day, which I will be henceforward referring to as 1 year, 780 days a 3-year, and 1,300 days a 5-year. So I simply turn this off. And I can see this entire line chart is a representative if I consider 1 year as my holding period in this particular fund. So for an example, if an investor would have invested exactly 260 days prior to the first point that I'm hovering at right now, that's 9th of Jan 2015, exactly 1 year prior to that. That means the start date that we have considered, 10th of Jan 2014, he would have gotten a return of 46% from this particular fund. Okay. And again, this will roll on a daily basis, considering the last 260 days. Meaning to say, if you simply hover on this peak that you can see on this line chart, right? Somewhere around, one second. Yeah, it is coming somewhere around 71.92%. That is clearly mentioned in the tabulated manner here at this level, right? On the other hand, the trough, that means the lowest point of this particular fund is a negative 34 or a negative 37. That would be around somewhere here. That means the investor would have been unluckiest if he would have invested exactly 260 days prior to this date of 6th of April 2020. He would have made a return of negative 34.73. Right? This is considering 1 year as the holding period. Now, the moment you increase the holding period, typically as is said in mutual fund investments, right? As you increase the holding period from a 1 year to a 3-year and to ultimately a 5-year, the lowest that this fund has given becomes a negative 0.69%. Now, mind you, this is the lowest that this fund is given. If the holding period is a 3-year, a 5 years, this is 1,300, right? That's 5 years. On the other hand, the average returns increased to 64%. Of course, is on an absolute level, right? And the volatility is typically reducing. That is what you can see. Next is the rolling returns distributions, wherein you can check as the holding period increases, the probability of this particular fund giving in double-digit returns actually increases. So let's from this drop down simply, once we choose 260, we see that there is fair amount of observations into this negative quadrant. So negative 37 to a negative 15. This is the return range that we are looking at. And out of the total observations, 3% of the observations fall into this range of this particular fund. On the other hand, single digit returns, so up to 6% positive returns, there are close to 30% of the observations lying up to 6%. As we increase the holding period to, let's say, a 3-year period, that's 780, the moment I do that, double digit return, look at that, the probabilities um, of this fund generating a double digit return are a 14%, and so on. So 14 plus 42 plus 26. So the probability of generating a better return simply increases as your holding period increases. So this is one analysis that you can do using this rolling returns distribution and rolling returns analysis. Next, let's come to the last part, which is discussing on the scenarios analysis. For that, simply come on to the second last tab of this fund analytics, and you will have an option to actually check the performance of your fund versus to that of the benchmark in a specific time period that you're targeting. Right. So let's for an example, consider Diwali 2023 as a scenario. Right. All I have done is I have clicked on add a custom scenario and I've put in the start and end dates. So the moment I click on Diwali 2023, the dates I've considered are 1st of November 2023 to 27th of December 2023. Right. So this close to 2 months period that I've considered. And in this time period, my benchmark performance is indicated by this black line. My portfolio performance is indicated by this blue line. Okay. My benchmark given 15% return in this time period. On the other hand, my portfolio actually outperformed the benchmark in this 2-month period and actually gave in 4% excess return over to that of the benchmark. Right. So this is one analysis that you can do using the scenarios tab. And of course, this is customizable. Let's say you want to have a look at 2023 as a calendar year analysis. You simply go on add custom scenario. You put in the name of the scenario, let's say year 2023, put in the start date. So 2023, 2nd of January, end date would be 31st of December 2023. And you click on save custom scenario. The moment you do that, you will see the scenario that you would have created appear right here. And you can see the performance of your fund versus to that of the benchmark. So look at that. It's close to, double the performance. 25% was the benchmark return. 41% is my fund's return. So this is one analysis that you can do. And of course, there are, let's say you want to highlight all of this analysis to your client. You can simply generate a PowerPoint of this particular individual fund analytics. The moment you click on that, a detailed PPT will get downloaded. And with respect to the customizations, let's say you want to highlight this Diwali scenario, or for that matter, year 2023 scenario to your client. You simply load that PPT and you can insert a slide, because this being a PPT, it's editable, right? The moment you open this PPT, and of course, the existing slides will definitely be there. This is the asset allocation, the exposures with respect to top 3, top 5, top 10, the asset allocation with respect to large cap, mid cap, small cap exposures. Those data are definitely going to come. But let's say you want to highlight the scenario that we were just seeing at. So you simply click on insert to add a new slide. This gets added. Go on to the NGEN Markets platform again, and using a screenshot option that is available everywhere on this platform, you can take a section specific screenshot and incorporate this scenario in the PPT. So let's say I want to highlight this year 2023 scenario. I simply take a snip and I include that in the PPT right here. So this is how I can make the PPT more relatable for the client. When you're picking up investments, this becomes very, very crucial. Okay, you're highlighting many scenarios, customized scenarios, whatever could be relevant for the client. And then you can simply convert this into a PDF or simply take it like that itself with your client. So this becomes a good talking point. So that's about it from my side with respect to the webinar specific discussion. If you have any questions, please feel free to type in the chat box or directly unmuting yourself to speak. Thank you.
Hello. Am I
Yes.
audible now?
Yes, yes, you're audible. Please go ahead.
Can you please explain rolling return one more time?
Sure. So the moment you go to rolling returns, you will have an option to put in holding periods, different holding periods. 260 days is equivalent to 1 year. 780 is equivalent to 3 years, and 1300 is equivalent to 5 years. Okay, and these line charts that you can see are equivalent to those corresponding periods. So 260 days is blue, 780 days is black, and 1300 days is this green, right? The tabulated data shows you what is the average 1 year holding period return generated by this particular fund if we consider 260 days as the holding period, and that comes to a 15% average return clocked in by this particular fund. The highest and the lowest refer to the peak and the trough that was clocked in by this particular fund given 1 year as the holding period. The highest 1 year return by this particular fund was a 71.92%. Conversely, the lowest 1 year return of this particular fund was a negative 37.29%. Similarly, you can extrapolate this for a 780-day period and a 1300-day period, which is typically 3 year and a 5 year period. Next, we discussed on the rolling returns distributions, which is typically to put in the client's target return range here. And you can check the probabilities of this fund back testing into that client's target return range. Let's say, for an example, the client says that, okay, my target return range to generate return between, a moderate 7% to, let's say, as high as a 35%. Right? When we are we are hard coding this range to 7 and 35, that means the client does not want a single observation or a single return which is below 7%. Neither does he want it above 35%. And we click outside. So we see that this fund, Nippon India Value Fund, meets the client's target return range to generate return between 7 and 35%. Considering 3 years as a time period, because from this drop down I've chosen 780, is a 26%. That means 26% of the times this fund will meet the client's target return range. Right? So this is what is the significance and utility of rolling returns distribution. Okay, so there's a question in the chat box which says, can you explain rolling returns comparing two schemes for scheme selection? Yeah, sure. So for that, you will have to head over to the compare section, right? Because this was single fund analytics. You go here in the compare section, and let me honestly remove everything. Let me add just two funds. So let's add once again. Let's add a Nippon value. And which was the top performing fund here? I think ICICI Pro Value Discovery. So we've added iPro Value Discovery Fund. So these are the two funds that we have taken in the compare section. The moment we do that, there's a dedicated tab, which is the second tab in the compare section for rolling analysis. You go to that, and this is how you can do the analysis, comparing two funds side by side. One after the other in one single tab. So in this case, we have put in a rolling window of 260, which is 1 year rolling. You can put in a start date. So we were doing a 10-year analysis. So let's keep it consistent. So Jan 10th to 11th of January, annualized basis, simple returns, and run. Right. So in this case, if we compare these two funds, iPro Value Discovery funds gives me a better average returns as compared to a Nippon. Of course, there's a slight difference, but still, it's a better performing or better generating average generating fund as compared to Nippon. On the other hand, we can also see that it has, a higher positive percentage. iPro Value Discovery generates 85% of its observation in the positive quadrant when we consider 1 year. Right? The moment, let's say you want to do this for a 3-year period, that's 780 days, right? So you put rolling window as 780, you click on run. And you see Nippon, if you consider a 3-year period, Nippon becomes a better fund which generates a better average return. Right? So this is how you can add as many funds as you would like and run a rolling returns analysis. If there are any more questions, please let us know.
Okay, if there's nothing else, Projector, we can close for today. Oh, sorry, I think there's a message.
Yeah, please tell once more from where to download the PPT. Yeah, sure. So if you're doing a single fund analytics, the moment you load in that particular fund in a new tab, let's understand afresh, right? So this is the one analysis that you're doing. Let's say you want to highlight the entire details of iPro Value Discovery Fund. You click on this fund, it gets open in a new tab. Right, the moment it gets open in a new tab, you will see a PPT option right there at the top. You simply click on that and a PPT will get downloaded. Now there are these PPT options at multiple places. This was single fund analytics. Let's say you're doing portfolio analytics. Then you simply go to the portfolio section and run a portfolio. And then you will also see the PPT option there as well. Of course, that will be entire portfolio analytics PPT. So right beside the name of the portfolio, at the top panel, you will see a PPT option. Okay, there's another question in the chat box which says, can you please explain risk score, return score, and engine fund score again? Sure. So the moment you click on this, you will see this, 3 scores coming up. Now, first, let's simply understand risk score and return score. These 2 scores are independent of this engine fund score. Rather, this engine fund score is independent of these 2 scores, right? When we consider return scores, this is considering simply the simple returns or the cumulative returns of this particular fund over a time period. On the other hand, the risk score only considers the volatility or the standard deviation of this particular fund. Right. On the other hand, the engine fund score, which is a sort of a primary score that you will see everywhere on this platform displayed right there out there, is going to be this engine fund score. Now, to arrive at this engine fund score, we have taken a combination of AUM of the fund. We have also given an allocation to short, medium, and long term risk adjusted returns, right? Meaning the Sharpe ratio of each of these funds, right? And of course, age, as we discussed in the webinar, right? So if it's a very, very young fund, it will definitely have a disadvantage, meaning it will have very, very low fund scores. On the other hand, if a fund has been around for a 5-year period, that disadvantage will automatically disappear. That's because it will have the data to calculate these short, medium, and long term returns.
Ajita, can you explain the kind of weightage which you have given to this, like for the tenure as well as to AUM? What is the weightage in these engine fund secure?
So on average, the weightage is about 10% to AUM, and the remaining 90 is divided quite equally to short, medium, and long term. And we don't consider any returns over 5 years. So it's even the longest period that we consider returns for is 5 years.
Okay, fine. Second question to you, sir, that when we are comparing funds like that, you have shortlisted a category. This category average is there also in that entire sheet, just go to the first sheet, where we have started, not the compare one here. This funds, you have shortlisted one category.
Yeah, you can see
And
the category averages here.
while comparing, it will show there, sir.
Yeah, in the compare, when you're comparing various different funds in the compare section,
Yeah.
you can not just add funds, you can also add a category average to this list. So on the top,
Okay.
you will see there is a place where you can select any category average and you can put it in also.
Right. Then it is more comparable that we can compare fund across that what category returns is there and how many funds are above that.
Exactly. Yes, exactly.
Thank you so much, sir.
Thank you. Any other questions?
And something apart from this, yesterday I was sitting with Bajaj team. I was just analyzing their funds. Recently, they have come across one fund which was closed on December 23. But I was saying that there was no AUM showing over there.
Sure. We'll have a look at that. What was the name of the fund?
It's because I was analyzing Bajaj has 8 or 9 funds, not more than that. The
Right.
latest fund was, I
Right.
think that they have launched. Which one?
It could be that the AUM data hasn't come through.
No, I filtered it through that AMC itself. Right.
We can check it. Age. Yeah.
Yeah, the Bajaj. You have just only 5 or 6 funds. One there another fund is there in an equity category also. Seems maybe. Yeah, it is showing it today itself in your screen, but it was not showing in our screen yesterday.
Right. I think is this a new fund?
Yeah, I think that is the new fund which
Yes.
closed for
I think
subscription on 8th
Okay.
December.
Okay.
So maybe one month time lag
I
was
think
there, and
yes, for the data update, because sometimes it depends on when the data provider sends us the information. We check with them every day. So obviously it has been updated now.
got you, sir. Got you. Thank you so much.
Thank you. Thank you. Any questions? Please let us know.
Yeah, hi. Anirudh, this is Vikram here. Just since we are on a new fund thing, when comparing a new fund, let's say Bajaj has launched their, let's say banking and PSU fund, right? So if we go to the category, for example, or let's say if they have maybe FlexiCap would be probably a better one. If you go to Bajaj FinServ Flexi Serve. Now, though they are a new entrant, right? And if I want to, so there is no history. The only difference between this and any other fund would be the historical performance and the size of the AUM, right? If I remove from my overall categorization or whatever, if I remove the 10% weightage that's been given to that, if I want to compare that this fund should ideally behave very similar to which fund in the category, right? Going forward, that means okay, in terms of the underlying, it's very same as this flexi, that it's closest to this or it's closest to that. How does one do that? I mean, do I go to the positions and then correlation and look at that? Would that be a reliable enough?
Well, one thing you could do is in the compare section, you can load all the FlexiCap funds.
Right.
So just clear this list and just you can load a category here. So if you just let's say load FlexiCap, so this one should show up. And once they finish loading, you can check the position overlap tab. Here, let this come back. Here you'll basically able to see which other funds, and let's find Bajaj in this list. You can scroll down. Bajaj Finserv. Yeah. So as you go right, I mean, you see this has become a big matrix, so it's a bit hard to see it. You can obviously download in Excel, but you can see wherever the numbers are higher, that's how similar the underlying positions of Bajaj is to other flexi-cap funds. So
Yeah.
because this is showing the overlap of Bajaj Finserv's flexi-cap funds' latest holdings with other flexi-cap funds' latest holdings.
Right.
So here you can see they are generally not that high. So they do have kind of different positions. It's about 30% or so.
30.
With some funds, it's very different. Yeah.
So yeah, okay, fine. So that means and what would a correlation in this correlation matrix show me?
Correlation matrix. So correlation is based on returns.
Right.
So this might not give you very useful information because there's not enough data. So
Right.
even if you look at the correlation number, it's probably not that reliable because you need I mean, the correlations are still pretty high, as you can see. But again, the correlations will be based on returns, and for correlation, you should ideally probably just use a longer period to get some meaningful information out.
Right. Right. Okay, sure. And just another question. Suppose there is a client is holding too many there's too many funds, and we want to make a point that holding so many funds is not the right set right asset mix to have. Now let's say if someone's holding 11 mutual funds in different categories, 11, 12, right? Is the way for us to look at all those funds and take out overall? So let's say if there's 1 crore or let's say 1.5 crores over 15 funds, by adding them onto the in your compare section or in your portfolio section, can we take the last security in that fund, like the entire dump? That means, okay, if I'm holding, let's say in Bajaj Flexi, and I'm holding IDFC Flexi, or I'm holding HDFC Flexi, so a sum total of, okay, overall, what do I end up with in terms of the total number of securities, and each security by its total volume and the amount of money into a specific stock?
Sure. So that is available in the portfolio section. So when you run the portfolio analytics, you will get the asset allocation tab, which is the first tab.
Right.
So just as an example, this is a portfolio of 8 funds.
Right.
The asset allocation tab will show you the overall exposure that you have in any particular stock. So for example, in this case, the total exposure to HDFC Bank is 2.7% of the AUM of the portfolio. So if it's a 1 crore portfolio, this is 2,71,000 into HDFC Bank. So this is a clear indication of how much direct exposure you have to HDFC Bank stock. So if you see large numbers here, that could be cause for concern. And for example, if you see a number here that surprises you, you can click this I button and it opens up a little list underneath HDFC Bank, which gives you an explanation for why you have such an exposure. And you can clearly see it's because 4 out of the 8 funds that you have in this portfolio, 4 of those funds have a holding in HDFC stock. And that's why, and you can see the individual exposures that you're gaining towards HDFC by holding that fund at 12.5% holding. Because, take the first example, ICICI is holding 2.88% in HDFC stock. You're holding 12.5% in HDFC. And as a result, your exposure is that. And the total of that is your total exposure to the stock. So this gives you a summary list of your underlying exposure to each stock that you have. And the the next tab is actually analyzes these exposures further. So here you can see what kind of large, mid, small cap exposures you have, regardless of the categories of the funds. You can there are many mid cap funds which have a decent amount of small cap exposure. So you may invest. So for example, if you had a portfolio with only mid cap funds, it will
Right.
still have a sizable small cap exposure, and that will show up here.
Right.
So this is looking at your underlying stock exposures through the mutual fund holdings that you got, and showing you and analyzing those exposures.
Sure. And this shows, sorry, if you go to the overview, it will show the smallest security
Yeah.
also, last security.
Absolutely. You can scroll all the way down.
No, in the sense, not in the portfolio. Among the equity, if I go to the last equity holding, it will show that, okay, this is the on a 1 crore portfolio. If I go
Yeah.
really bottom, it should
All
show
the way down, yeah. The smallest exposure you have.
Okay.
The decimal places also increase as
Yeah.
you keep scrolling down, and then you can click that button and see where it's coming from.
Yeah.
So ICICI for some reason has a very, very small position in Beijing products and Globson.
Yeah. Yeah. Right. Sure. One last question, if you have the time. You know,
Yeah.
you know, the understanding on the REIT category as such, right? Because of the data that the way it is, you know, you have global funds and REIT funds. On that, is there any plans that you have with respect to getting a little more in depth, you know, workings on that side of, you know, because there are certain categories which are surely ignored because they're not the mainstream funds generally, and their data is you know, kind of one is there's a data lag, and also there is a, you know, so it's less available as much as you know, you have data for all the Indian funds. For overseas funds, there is, I seem to, you know, there's less availability of data and analysis on that. So have you considered it?
Well, we show all the funds that are available for sale in India. So there are obviously Indian funds that provide you foreign exposure, which is obviously hedged from a currency perspective. We don't provide Indian funds in NGEN Markets. We do have a separate product called NGEN Markets UK, which provides the very similar analysis, but for funds available for sale in the UK. But on this platform, NGEN Markets.in, we basically cover everything that's publicly available for sale. So if you're talking about REITs, you know, we'd have that available for sale in India. We'll have to look into how we get that data. So currently nothing of that sort is available.
Sure. Okay. Thanks.
No problem. Any other questions, please let us know. Okay, if there's nothing else, Prajakta, let's close for today.
Yes, sir. So thank you everyone for joining in. You can definitely check the recorded videos of past webinars on our YouTube channel. There's a link to access our YouTube channel right in the platform. So you simply click on this and then you'll get access to our YouTube channel. There's a dedicated playlist that we have created for all the past webinar recordings. Even this week's webinar recording will be uploaded by next week. So till then, do stay tuned. And thank you so much. Have a great weekend ahead.